Friends, in this video, we are going to talk on the topic exiting small cap funds. Many of you may be carrying mutual fund portfolios which is heavily loaded with small cap funds. Small cap funds have had an extraordinary run in this year. This has been beyond everybody's expectations. It has beaten the odds to achieve what it has. Clearly, small cap stocks have been the darling of this market. But small caps have a tendency to go through very high volatility. They tend to go down more than benchmarks and they tend to beat the benchmarks as well. This time, they have beaten the benchmarks. So what should an investor do when small caps significantly beat the benchmarks? First, you need to know that the small cap funds are carrying portfolios which are at historic highs in valuations. Good companies are a part of these portfolios. The portfolio construction has been extraordinary, but the valuation of these companies is certainly nowhere near their historic averages. It's well above that. Second, there has been a concentration in the investment universe of small cap funds. Everybody is owning the same subset of companies. As a result of this concentration, you have set yourself up for a risk. That is, when somebody wants to sell for a strong reason, then everybody may want to sell. So the exit door can become very crowded whenever people want to sell. Therefore, the funds may not be owning as liquid portfolios as we think they do. So far, they have been receiving money, and as they receive money, they are only buying more of the same set of stocks. So the expensive stocks are still maintaining valuations. Nobody is selling, and it's a very comfortable place to be. But when the market sees the first shakeout, it is quite likely that some funds may see redemptions, or some fund managers may decide to choose the path of caution, or the market can well see a rotation out of small caps into some other theme in the next year. We will see not just one of these trends, but more than one of these trends. So, it's very important that if you have been a small cap investor for a long time and today your returns look at their historic best, you should do something to protect those returns. So, what can you do? One simple thing is you take out your investments. So, generally what people worry about is, what if I take out all my investments and then it goes up further? So nobody wants to miss the last leg of a rally. So if you are one of those persons, then you may not be inclined to completely exit your investments. So you can choose a part exit. That's one option. Second, you can choose an SWP where you reduce your exposure to small cap funds over a period of, say, 10 weeks. So in 10 weeks, you can decide what percentage of your holdings you will sell. Ideally, I believe that small cap funds should not be more than 20% of your overall portfolio. So if it's higher than 20%, then it would be prudent for you to trim it at least to that level as a first stage. Then you keep a watch and you can decide to prune further when the valuations go even higher. Typically, concentrated ownership is a bigger risk than even market sentiment. The reason is, when people want to sell, nobody gets to sell, and by the time some decent selling happens, the valuations take a significant haircut. This has happened before in small caps. It will happen again and again in small caps. The fact that the small cap universe is very restricted to a narrow subset of stocks is a definite risk, and as an investor, you need to mitigate your risk at two levels. One is this concentration risk within the funds, and the second is the concentration risk within your portfolio. The only way you can do it is to trim the position of these funds in your portfolio to one stage, that is, reduce it to one level and then again to another level as things get even better. Nobody knows when this will turn, but if you decide that you will just accept whatever outcome you get over the next 10 weeks, then you may be in a better wicket than others who are waiting for that perfect moment. Generally, those who wait for the perfect moment only know about that perfect moment after it has passed. So don't be one of those. Try and get your investments to a safer place before it's too late. If you like this video, do share it with your friends who are keen investors in small cap funds and who are actively building portfolios with a higher concentration of these ones. Thank you very much.